Market data connection lost. Market data connection re-established.
Alrighty, TG. I am. Thank goodness it's Monday. We're back in the saddle again. Yo, George. Morning, Doc. Morning to you, George. Do you still use TradeStation 2000 for your back testing? I don't, but I've been thinking about turning it back on again. And remember, it was made a long time ago. The Cruises built that. I used to be a beta tester for them back in the '90s, and they moved over to TradeStation itself, the trading platform, and the software. I was running the software. I run it every so often, but I've been thinking about putting it up on a server. So I am thinking about that without a doubt, because it's a good. It's a lot like multi-charts. The multi-charts is basically the upgrade of TradeStation 2000 as far as I'm concerned. So, but yes, I it's a good tool. I have no problem with it. Love it. Matter of fact, my original copy has some proprietary stuff in it accidentally, as far as I can tell. So in other words, what's his name? There's one really great analyst out of Chicago that I'm trying to think of his name. Let me see if I can find it for you. But I noticed that I actually have that machine. I have that machine turned off. It's an old machine, and that computer, and I preserve it like a kitten. I protect it. And so I'm trying to think of the guy's name. It'll come into my head sooner or later. But no, I love the TradeStation. The TradeStation is good. 2000i. That's what it is. The TradeStation 2000i. And I'm thinking about putting it back up onto the network, because it's good. I wrote all my math into it to begin with. That's how I started off with. Have I ever tried AMI Broker? I don't know. I've never even heard of them. Let's take a look at them. Remember, I love answering questions, so I don't need to go right into the rhythm. Like you can see, we have the dollar index up there now, and if anybody else has a question, you can fire it out, and I will answer that, even if it's just, where is the cable today? Yeah, that type of thing. AMI Broker. Let's see. Maybe I know who owns it. TradeStation Premium Platform. Improve your trading. Is that what AMI is? AMI Broker Technical Analysis Software Charting. Discover your edge. Use AMI Powerful Ultra Fast Exploration Tool for scan. I think they're all. Let's say this. As I'm reading about AMI right there, I'm gonna. And you know what? I'm gonna throw it up on the screen. See it right there. I'm looking at that, right? And I can say this. You got. We have J4X up on there, and I use multi-charts and so forth. I think they're all at parity. I really do. I think that you don't really, when it said, like, that first statement makes me very suspicious. Let me go back to it, and I'm going to read it to you, what it was, what made me suspicious, and you'll understand where my mindset is. Speed. It's not high-speed trading, and no software you can buy can help you to do high-speed trading, because they are using, let's see, where's that mouse at? There it is, right there. They're using, a dedicated line to an exchange that has enormous. Why is my mouse being wacko? Oh, there it is. Okay. Now let me go back to that. Wow, the mouse is not happy from that website. It's somehow or another it's clouding it. Let's see. Let me get it back up on the screen here. Right there. All right. So now I'm gonna get rid of that. Wow, they make it really hard. That's amazing, because it's overlaid. Let me. My God. You can't believe the challenge I'm having to maneuver on that monitor because of it. I'm going to go like that. It's gone. There, see it flashed. It blacked out the chart even for a second. You might see that. It actually blacked out my chart for a second. All right, now I'm back there again. Now I can look it up again. And the mouse, wow, it's poisoned it. I have to literally empty my cache because they try to take over your machine as soon as you go to their website. That's horrible. And that tells you right off how bad they are. Have you ever tried? Let's see. I used TS 2000 years ago too. Not a coder though. AMI Broker is a charting and trading system. Yeah, with a very aggressive cache that comes from it. That's for sure. Let me do this. Let's minimize that. They're trying to stop me from. What in blazes? Let me do this. This is horrible. This is just horrible. I have to close my browser to get the mouse to work on two screens again. That's just horrible. Just by just opening their website. Let's see. Close Windows. There we go. Boom. Boy, that feels better. Now let's open them up again. We'll read about it. There we go. Now we're back to normal. Oh my God, that was horrible. All right, so anybody looking at this AMI, watch out. They're a very predator organization. All right, now let's read it again. But I'm not going to open up their website. It says, right off it says, AMI Broker, technical analysis software, charting portfolio. Discover your edge using AMI's powerful, it's powerful, all right, abusively powerful, ultra fast. What do you mean ultra fast? Exploration of tools for scanning. You know, J4X, multi-charts, TradeStation, they're all ultra fast. You know, now that's not, they didn't say ultra fast. It says scanning for opportunities and inefficiencies. I don't believe that at all. I just don't believe that. I just don't believe that statement. And me just trying to look at it, their advertisement took over my monitors. That's rubbish. Be careful, traders, if you look at it. Let's see, let's read another review. Summary pros and cons review is based on many years of live trading. AMI Broker is good for back testing. So is everybody else. You know, why do you need super speed to back test something? I mean, in other words, what are they talking about here? Let's see, perhaps a bit tedious for live and automated trading. The ultimate guide for this particular product, there's a video. I have no interest in looking at that. Just what they just did to my machine. Let's see, versus Trading View side by side. Yeah, you know, I might open it up on another machine so it doesn't pollute my system, but you know, I really have a hard time believing that they have anything particular just because of the way they're advertising. Let's put it this way: if it was a magical software that's really good, then they would say exactly what its strengths are, not through what's the word, metaphors or hyperbole. Instead, they would just tell us how good it is by what it did, and they wouldn't, when it comes onto your system, it wouldn't try to suck up control over your monitors. So be careful with this thing. It's okay, Doc. No biggie. Just asking. I'm always hungry, to look at. No, it was it's AMI, or is it A? Is it? I went to AMI Broker. Let me see if I can put it on this machine, because I'm afraid it'll blow up my what do you call it, the OBS. I'll look at it again. When I'll do it on another machine and I'll look at it and give you a real opinion. But I'm a little disappointed that it tried to take over my machine just by looking at the advertisement. It is AMI Broker, right? AMI, not AB. Okay, we'll look at it. But a lot of the high-speed stuff that goes on, it comes down to your data feed. So in other words, it doesn't really matter about the software per se. It's more of the data feed. In other words, who you're drawing your data from source wise. In other words, are you going directly to the exchange? Are you buying it from a second a second vendor where it has to go through their mill, I guess you could call it? Or what's the other thing that was in my head? How you draw. In other words, are you on a T1 line or are you on a fiber optic line? If you've read any stories, let's see, George says it's not an aggressive. Maybe you were on a different site. I don't know. Is it AB or AM? Or is it AB or ABI? I went to ABI. So you say AB myself. So is it AB? Yeah, you got to answer that if it's AB. But you have to understand that pretty much what their advertisement's saying, it has to do more with, like I said, where you draw. Yeah, that's where I went. I went to them, and it tried to blow up my machine. What most of what they advertised, what you showed, what we looked at just right there, real quick, is basically governed by where you draw your information, as I was saying. In other words, do you get it directly from the exchange? Are you getting it indirectly from a provider that takes it and then resells it in a package? And how you're drawing your information, is it a T1 line? Is it fiber optics? Is it what's the bandwidth of it? So forth and so on. That's really important. Yeah, that's where I went. AMI broker, and it tried to blow my machine up. Made me lose one monitor in the sense of I couldn't get my mouse to work on it. I had to go down and shut it off by closing out all windows and starting over again. And then after the webinar, I'm going to dump the cache from it so it's not laying around in there. But so that bothers me right off when anybody advertises something that the software is not really in charge of. You see what I'm saying there? Let me have a sip of my tea at the same time. Because, I know I wanted to explain. I wanted to explain is that these high-frequency traders. Now, first of all, they worked out of my office, the high-frequency traders, the speed boys, okay? At Amex. And at the Chrysler Building, Amex. I didn't know. I'm sorry. I'm on the site now. No problem. Sorry about that. Are you on a 2-monitor machine, or are you on a 1-monitor machine? It didn't bother my chart screen. It bothered my my screen that had my operating system on. I'm using Chrome 3-monitor, okay, and it didn't interfere with yours. Maybe your machine's better than mine. That's possible. I just bought this one, and it's supposedly good, but it's my sons have been telling me that the hard drive is last generation as far as they're concerned. That's why I got it cheap, they said. So it's got everything updated and it really nice, but they tell me that they think that it's the next generation or next level of hard drive. So I kind of doubt it would be a problem with that. All I know is it tried to steal my cursor. It wouldn't let me tap on anything but their website on the operating system. So, but So anyway, let me finish my thought on speed in software. Speed in software. So not only what I described to you is let me just reconnect there too. Not only is speed and influence a see, I'm looking at it there. I'm reading. You'll be able to see in a second there. I'm looking at the advertisements. Not only is speed not the software, basically what it is as I've described to you, but there are now high-speed traders putting up their own towers. Okay, now remember, high-speed trading, because they're insinuating that their scanner is going to be faster than anybody else's. And I don't see the value in that to begin with. So, in other words, a scanner, you're looking at it like a position trade, right? So, why do you need high speed to be like 30 seconds or 10 seconds faster? I mean, in other words, you're not intraday trading, right? I mean, you know what I mean? In other words, the only reason you want high speed, and it won't come from the software per se, it comes from, as I just said, your providers and your bandwidth, how you receive it out of the three. I'm not going to repeat myself for a third time. That'll make me sound old. I'm already old. But what it really does is it focuses on, there are high-speed organizations or companies out there now. They're putting up their own towers, their own microwave towers. They're spending that much money because what happens is that this is the real crutch of it all, is that they are being paid with a royalty or a stipend to generate volume on the different exchanges, and so the high-speed traders get permission to trade and get into the pipeline by speed that way. George says, I've been using AB since '05. Just was asking if you heard of it for causing you. You didn't cause me problems. We're still functioning, so we're good. Don't worry. No sweat. Easy. Relax, George. Relax. It didn't blow the machine up that bad. It just tried to steal my platform. That's all. The Google platform. It tried to steal it and stop me from going anywhere but on the ABI. So now, what's the difference between AB and ABI? Because you say AB and then you say ABI. Is that a different one altogether? I'll go look up AB broker instead of AMI. Let's see, AB broker. American Business Brokers. Is that the one you're talking about? And AMI is, no, just didn't spell it out. Oh, okay. Okay. So there is a thing called American Business Brokers, a certified business brokerage. That sounds like a brokerage house. They're not showing any platform. AB Brokerage Inc. Insurance. Yeah, so what they're doing is they're telling you that they're faster, when in fact, if I have a slow system, a slow internet connection, it won't matter how good their software is. I won't be able to outmaneuver somebody else. As far as I know, and we're not leaving the subject at all, but as far as I know, the high-speed traders are not making any money. Excuse me. Hold on a second. Got a sneeze coming. Isn't that supposedly mean I'm saying the truth when you sneeze and say something? Anyway, as far as I know, high-speed traders are not making money because of their high-speed abilities. They're making money because they're getting financed by the exchanges to generate volume. Remember, we've talked about this. There's a problem with market making in the United States now. So in other words, market making, the brokerage houses are not market making because they don't have the volume and the markets are too tight. We've talked about this. And I'm not repeating myself in the sense that this conversation could go deeper. So it's like I'm not like repeating myself that we've talked about this before. The problem is that the bids and offers are too tight, and so brokerage houses are having a hard time making markets. And at the same time, brokerage houses need to make markets to keep their BD license. And the Securities Exchange Commission keeps on threatening them when they're not doing what they're supposed to do. Now, if they lose their brokerage license, then they can't do execution for clients. So, it's a big circle, when it comes to the whole situation. But for someone to put a software out there claiming that theirs is going to be faster, says to me that that's hyperbole. In other words, maybe it is the best functioning, fastest software out there. But if you don't have the bandwidth or who you're drawing your data from equal to the best of the best, then it doesn't really matter. Does that make sense to you? I guess I could have said that right in the beginning about 12 minutes ago or 14 minutes ago. And so at the same time, you have to assume when you're talking about, I assume, you don't have to, but I assume when someone says that their software is faster than everybody else's, they're trying to make you believe that you can do trading that's faster than everybody else. When in fact, again, it's not. That's not the layer. That's not the system that helps you do better execution. It's more like what we go through every day. Yeah, and it's what we go through every day. We look at algorithms that are ahead of everybody, and they're not like ahead by like even, like Timothy has us looking at the 1 minute. Let's use Timothy's stuff. Let's go to Timothy's stuff. And that's a good example of high-speed trading or just trading in general. There's Timothy's stuff right there. Okay? And I think we have some of the stuff that he had in there. There's a moving average in there now. So the yellow and the red is the average he's been following and so forth. And they're like 3 minutes, 2 minutes behind my algorithm. Okay? So in other words, now if they here, this would be the way Doc would do it. Okay? This is the way I would do it. If you're advertising a software that's better than everybody else's and faster, I would be talking more about not the speed of the software, but I would be talking about the efficiency of the algorithm or the technical analysis. And that's pretty much what we do here, and that's why I started doing Dukascopy, 10 years ago, is because they leave me alone to talk about the marketplace. And they allow me to talk about everything and anything about the marketplace. And then I use their platform to show what makes their platform more productive than just their speed or their programming. We were using their old platform for 3 or 4 years when they had this new one out. Then finally I jumped over to it, and it's still doing the same thing. We have our indicators in there that are more efficient than the general indicators, and they match up to my indicators better than, say, someone using RSI or some type of EMA, some type of moving average MAE, moving average exponential, or So in other words, what it really comes down to is if they advertised and said we have the best technical analysis tools that can be bought, that would catch my eye in a heartbeat. I'd be there right with you, instamatically, like a snapshot in a camera. So in other words, but trying to advertise, claiming that your software will, read the markets faster than somebody else's, they don't have any control over that. Because if they're using, some simple, internet connection, it's the baud rate that's going to interfere with that more than anything else. I hope that makes all sense. If anybody else out there has an opinion, just tell me. I'm not nasty. I think it's great you're still using. Oh yeah, Trade TS2000i. I love it. Yeah, that's what I'm having problems with right now. That's why I won't turn the machine back on. Because remember, it's like it was invented before there was like what was it, like Windows? There was just Windows. There weren't numbers. TS2000 was invented when there was just Windows, not Windows 7, not Windows 5, not in Windows 10, so forth. It was, it was running on DOS. It was running on the old, basically running on, Windows was running on DOS. When they created Windows, there we go again. I've allowed it to walk away again. When Windows 10 came along, what it did is it changed See, I'm looking at AB brokerage there on the other monitor now. Yeah, I'm looking at all this. Hey, I'm right there with you. I want to learn. Trust me. As far as I'm concerned, I'm almost 68 years old, and I'm always willing to learn something new. That's what traders do. We're always hunting to find new things. So let me see. Where am I going here? Where am I trying to go here? There it is. Let's go like that again. Back to the charts. So, yeah, you would want them to be advertising these things, the lines type of stuff going on, and the lines like this stuff, like our algorithm. That would be a real turn on for me. I'd be like, oh man, I got to take a 30-day service of it to see how it works. What they're doing is they're advertising in a different way. So, anyhow, I hope I didn't wear anybody else out about this. It was just I'm always willing to explore, and that's who I am. In other words, matter of fact, that's what we started. We talked about this too here on Dugoscopy, on the webinar itself at Dugoscopy. We used to refer to this as Algo Wars. That's what it was. The title of it wasn't DocDow. It was Algo Wars, because I wanted to see if I could during the day of reactive trading on the exchange floors, you had a lot of opinions. You had a lot of ideas, some good, some bad. But you had the ideas. At least they were there. Even if there were bad ideas, you were hearing them. Now in the proactive universe we are in now, where we don't have exchanges really anymore. They're just electronic ECMs delivering data, the execution and so forth. There's like 46 different exchanges. The New York Stock Exchange is not even an exchange really anymore in the sense of an exchange. It's owned by Life. It's owned by ICE. It's owned by ICE, by the International Commodities Exchange. So, the whole concept is totally different now. The bids and offers are half a cent wide and a tick wide, and not 6 cents wide. So you can't make markets, and when you're not really seeing the ebb and flow of the marketplace, then it's hard. Like the tape reading thing. We could have that conversation too about tape reading, and without with the way the exchanges are now, you can't really read the tapes anymore. There's no tapes to be read. So you got black pools. They're hiding execution. They come in at the close of the day, or they come in 2 days later, or 3 days later. The Futures Commodities Trading Commission allows that to go on. Sometimes you don't see it until you see the open interest expand 2 days later out of nowhere for 2 days back. It's like, what? What's that all about? So, I guess that answers really the whole shebang of this, our new marketplace. Your algorithms and your technical analysis is so much more important nowadays than it used to be. Back then you could read the tape, you could see, buyers coming in. Then they legalized options, and once they legalized options, someone who's buying stock didn't mean they were getting long. It just meant that they might be putting a straddle on, or they might be covering their short, or they buying stock means they may be closing their position. That's the weirdest part, and it wasn't a bear position to begin. That's the crazy part. Here, you ready for this? This is real crazy now. Back in the old days before options, when someone was buying stock, they were initiating a new, open interest. Okay, or they were covering a short. It was one or the other. And so either way, it showed demand on the buy side. Okay, shorts were covering, or new buyers were coming in. Once they created options, that gets thrown out the window. Because now, when they're buying stock, you don't know if they're building a position or if they're closing a position. Before you had a general idea. Because if they were buying and there was no options, that meant they were doing one or the other. Either way, it was demand driven. In other words, you knew buyers were coming in to cover shorts or to initiate new position. Now, with options, it's just another arm. That's all it is. It's another leg of it. It's like a three-legged stool. So you could go like a three-legged stool is long, short, and then options. And before that, it was a four-legged stool. So the four trades were it. Now that third leg you could really consider it like, the zero sum factor gone. So you could really consider it like a 30-legged stool. It's like a 50-legged stool now, not just a 3-leg or a 4-leg. It's a 50 or 100-legged stool. You have no idea what anybody's really doing because you don't know what their option position is. Now, if you could find a software that takes open interest and volume from options and matches it to everyday trades that minute with the underlining, that's something. You see that? Hey, Timothy. So that's something. You see that one? See that? See what I'm saying there, George? That's the cat's meow. That would be something like, hell yeah. You want that. We used to have that with Thomson. Thomson now is owned by Reuters. And Thomson used to be able to give you that data. It cost, you had to have a T1 line, and that's like a couple $1,000s a month. And then Thomson itself was like a couple $1,000s a month, which was all right because it paid for itself easily. And so what it did is it was showing you open interest of options, buying and selling. Remember, options define when they're opening and closing. So in other words, someone could buy an option, and if it's opening, it means they're initiating a position. If it's closing, it means they're closing a position. Not only that, what else is recorded is if it's a customer, in other words, retail, or professional. It's both of those. So, there's a lot of information on the options universe compared to the underlining universe. When you see a futures trade, you don't know if it's opening or closing. You have to wait for the CFTC to tell you 2 days later if open interest is expanded or contracted. Options tell you instantly. The moment it's transacted, it has to be defined, one or the other. You can't just buy a call. If you're buying a call, you have to be opening or closing. You have to define that in the trade. And you have to define if it's a customer, in other words, like a retail, or firm, F, like, a hedge fund or a brokerage house for proprietary trading. Or, yeah. And that's something. The amount of information that's being given when using options compared to the underlining like stocks and futures. So if you run across a software that's doing that, let me know. Because right now, most of them are very expensive. And I know how to trade basically around that. But not everybody does. And matter of fact, I even have a software around here that does that. And I haven't used it in a while, but that's because of the data feed. Because Thomson now is owned by Reuters, and Reuters wants incredible amounts of money for, I think they want $5,000 a month for it. So it's like, well, I'll just trade spreads. I don't care. I don't need to know instantly. I'm not doing anything that professional. I'm like a customer. I'm just out there, just your basic customer doing spreads, bull spreads, bear spreads, butterflies, trapezoids, and they're getting turned into things, because of that. So anyhow, I hope that answered some of it and gave some insight to the universe of what runs through Doc's head every day. There's a lot of crazy ideas floating around in his head, trust me. So there we go. I'm answering somebody. There we go. There we are. All right. So now, where do we go from there? Timothy, what are you up to? You want to see anything particular? We can. There we go. All right, where are we at now? We got to go back to currencies. We can go back to the currencies. And you can see Timothy. Oh, let's do this too. Let's get Timothy Singh into a two-piece situation. Well, that didn't work. We got a tent there instead. Let's go like this. Bring that down like so. Right there. And then disconnect this like so. If I can find so. There it is right there. There we go. Shrink that down too. Move that over like that. There we are. There's Timothy's thing. Is that Timothy's? No, that's not Timothy's. What did I do? Did I do the wrong thing? No, I see. We got, there's Timothy's right there. So we'll move that over to the left like that. And we'll move this over there so we can see the screen again, like so. That's so. So. And so Timothy can see his stuff live, like that. There we are. And what else we got going on? There we go. And then we can... Now that's what is that? That is that's the intraday S&P 500 on the right. There's Timothy 15-minute. It's got his moving averages in there. See that, Timothy? The moving averages are in there. Cable, there it is. Yeah, let's see. Let's take a quick look at it. Make it bigger too. You can see there it's went into the buy here for this nice little move right there. That was pretty cool. Let's do that right. So see right there. Right, and then then we see. Let's move that over again like that. There we go. And then you can see at the same time what else we got going. Then it went into right here, went into the sell, and it glided down all the way to it. See, it tried to get back into the buy, did not survive, never got into the buy. Still in the sell from here all the way to right there. There's your buy. So it was in the sell for this whole move down. And now we're in a buy, and you can see it's trying to lift up. Boy, I'm getting dinged all over the place. What is going on here? We got better ships. Food and paper. There we go. And so, yeah, I can see that. But look at it. When we left on, let's go to the daily chart. Wasn't it like in the 19s on Friday, right? So let's go check that out. Let's go check out the daily chart on cable. Oh, that's not it. We go like right there. There we are. And so, let's see. Let's see. Let me see. Where is it at? Let me find Dukascopy here. Okay, yeah. So let's put cable up there. There's Euro. There's the cable. So okay. So on Friday they blew it through the 120 area, and now they're bringing it back down. So it went back into the buy on Friday. Right there. And let's see. Let's put that in there like that. And let me do this too. Let's try this mouse. And so Timothy says another development over here is I switched the moving average from 5 to 13 and EMA to 5 to 8. Okay, we'll slide those in. I just need to answer this one text I'm getting. Let's see, go like that. And then let's see, I go like this. Someone's asking me about my webinar. So I want to put that up there for them. Let's see, where's that at? It was right there. And then I go like this. There we go. All right. There we go. All right, so let's go check those out. let's go take a look at those indicators again. All right, so I'm going to put it up on the screen. There's the moving average exponential. So it's 13. What should it be now? Let me get rid of this. So this, Timothy says, so we were 13, so now that's a 5 on length? Is that what it is? So let me see. Timothy says, another development over switch the moving average from 5 to 13. 5 from 13. Which one was 5? Oh, wait a minute. From 5 to 13. Okay, so this one is 13 already. And what did you do? The EMA to 5 from 8. Well, we had the wrong ones in there already? I think we had the wrong ones in there. So EMA is what? 8? 5 and 8. Okay, so let's try that. Let's put 8 in there. Oh, yeah, there we go. And say okay. And then I guess the other one, there's the 5. So what do we do with the 5? We had 5 in there. What's up with this thing? Cancel. Okay, so there is, let's see what that is again. There it is right there. Now that is, let's see, that is 8. And we moved 5 to 8. Providing earlier signals on 1 minute. What am I doing? I'm doing it on the 15. Okay, cancel. All right, so then let's go to 1 minute. Where's 1 minute? It's in here somewhere. Where's 1 minute? There's that. There's that. I thought we had 1 minute. There's 1 minute. There's 1 minute. So we go like that. Okay, so cancel that. We go like this. There we go. So that is now 8, right? Is that what you're saying? That's 8? So now it's, okay, how's that? So that's what it is now, right? And the other one is 5, right? Yeah, see, it's 5. Okay. So we're there then. Now let's move that over. We'll go like this. Remember on Friday we did this. We just moved one up like so, and then took this one. And then, there we are. And move that over, like so. There we are. How's that? Is that better now? Okay, cool. All right, so let's go over to here, and we'll go and look at, where is it at? Well, we were looking at cable, right? So let's look at the cable. There's cable. You can see the pressure on it. It jumped into the buy on Friday. Let's change that color there. There we are. There we go. And you can see here it's still battling to get through. Let's go over to J4X and see what they're doing with that. This has been an interesting morning talking about software. It's okay with me, guys and gals. I'm always willing to talk about anything on this webinar. Anything, honestly. Let's see. So here is, let's move that. Let's put the cable up there on J4X. And then we'll look and show you how well this system is, like that. There. And so, yeah, and this is what, the daily too. This thing's been zigzagging. You're right. It's been doing that. Well, it's been doing that. You see it here. You see how it's just been going sideways. You know, it's been doing that. I'm not sure why, but that's what it seems to be doing. It doesn't have, there doesn't seem to be a lot of conviction to either of those currencies. Oh, I know. I wanted to tell you about a story. Wait a second. This may answer it now that I'm thinking about it out loud. Here, let me, where is it at? Let me put up a story up on the screen that's totally fascinating. Where's it at? Right there. Right there. Right there. It's about central banks and how much they're underwater from the increase of interest rates. Very interesting story right there, minus the advertisement, of course. If we can get rid of that and get rid of that. It says here, let's go up here. It says central banks are suffering staggering losses. The higher rate rises. And they're talking about the Federal Republic, and they're talking about everybody. And Fed operating losses, you can see the dip that's going on. Look at that. I mean, from, with those zero and crazy interest rates, from, let's see if we can pull this down so we can see it all together. There we go. There's the date. So there's 2009, right? Their operating losses were almost like minimal, nothing, right? And then they start doing quantitative easing and zero interest rates. And then when interest rates start to rise here last year, you can see here, that's why they fought so long. That's why they called it, they didn't call it transitory for nothing. They called it transitory because they knew they were going to get smacked in the face from it. Missed a buy opportunity, was waiting for a retrace at the flip zone. It's definitely running up, that's for sure. You can see on your 1 minute here, it's been very interesting. It went into the sell there, right? Let's see, 4 of them, right? 4, 5, the fifth one. So 1, 2, 3, 4, 5. Went on the sell there and just turned right around and tried to start turning up. And then here it still tried to turn up. Then it went into the buy right there on that. And then off to the races again. Now here, it went into the buy right there. What's that? This one right here. It went into the buy there an hour ago. And it's been on the ride up ever since. So, yeah, so look at this. I mean, this is the Fed operating losses. They're just getting smacked in the face hard, No need for the 15 minute. All right, let's minimize that 15 minute. And where is that? It went back to there. We'll go back to that, like so. And bring, what's that behind it? Oh, that's the story, right? Yeah. So we go like this. Let's bring the 1 minute up like that. There we are. So you can see that as clear as a bell. And then you see there, look at that loss. And then there was a second story. You ready for this one? This is like a double whammy going on with the whole marketplace. Check this out. Let's see, where is it at? Let's see. We'll find it in a second. All right, check this story out. This one really blew my mind even worse. It's bad enough I knew that they were losing money, so there's no doubt about that. But when you can print money, what's the difference? And people are willing to accept it, it doesn't really matter. But check this one out by Mobius. Mobius, he's not a hyperbole type person. They're very God-fearing type of people. They have, they're just, that was the Mobius and, I can't think of his name now. And I met them and talked with them back in the 80s before they were famous. But this one here, Mobius says that John Templeton and Mobius merged together. And they do some really great philanthropic things. And, they're very good people. And Mobius says, I can't get my money out. Billionaire Mark Mobius says, China blocking investment outflows. Says that I'm personally affected because I have an account with HSBC in Shanghai. I can't get my money out. The government is restricting the flow of money out of the country. Mobius told Fox Business News on Thursday. So I would be very, very careful about investing in China. Well, he's been warning for a while about that. So it says here, it's just amazing. He's saying it's just, let's see, where is that? Right here. Let's get that lit up more. Can you see that? Yeah. He says, let's make that bigger too. He says it's amazing. I talk about China being a very different type of entity compared to what people think it is, And here's a perfect example. It says Mobius says that Hong Kong seems to be a little more open, and that he's been able to get his money in and out of there. And according to Mobius, China under X, Xing, is operating in a completely different direction than the country's former market-friendly leader, Deng Xiaoping, you know. So where to invest? India and Brazil. Now, Mobius and Templeton are very big on foreign investments for decades upon decades. You know, since like the late 70s, they've been big investors in equity around the world. I remember John Templeton saying to me, you know, buy Mexican Telecom. It's under $1. It was like 90 cents or 80 cents, something like that. He said, buy that. It's going to be a multi-billion-dollar company one day. And it was. The stock went out. I have one stock I paid for what did I pay? Like $3 a share. It's now $400 a share. I still haven't sold it. I'll put options against it once in a while. That's about it. But not the telecommunications, but you know, stuff like that. You know, the old very coherent money managers of old who knew how to use money correctly. Now, John Templeton's and Mobius's fund is still around. So, China is definitely different. Yeah, definitely different, Timothy. Very different. I call them the angry colony. They're like a colony of America. We never had colonies. We have districts, but we don't have colonies. But they're like a colony of ours, and they hate us. And we pour in some crazy number like $350 billion, $250 billion a year, and we buy from them. It's like, what is wrong with them? Why are they trying to bite the hand that feeds them? I don't understand it. Crazy people. Crazy, crazy. Anyway, there are the two stories today I wanted to talk about. And we'd have. And George came in with a really good question about, is that the director? Who is that? Came into the marketplace. Wow, look at the way cable's running. Cable's making a nice jump there again. Now, what it did, it went into the sell on the 1 minute here. Let's fix that so you can see it a little bit better. So it went into the sell there, went back into the buy right there. So they tried to knock it down, from here, and they couldn't get it into the sell. They finally get it into the sell on our math, and it goes right back into the buy, and it is winner, winner, chicken dinner. Look at that. Look at this thing taking off on it. It's like happy, happy. Now, what do we have over here? There is, that's the same thing. That's the, what is that? That's so we can minimize that. That's the 15 minute. That's what that was. There's the 15 minute right there. That's a 15 minute. Rocking and a rolling and a reeling. It was in the buy all along, so you wouldn't want to take any short. Treat that like the weekly. Treat this like the daily. All right, and then from there, we go back to, here's this U.S. stock market doing the same thing. We're taking off again. We're getting going. Now, this week, the Fed is going to be coming in, and I think they're going to be doing their rate thing this week, so that could be fun also. Powell's testimony. He's found the Lord. Powell has found the Lord. Investors are waiting for Powell's testimony. That's why the Fed and Mrs. Yellen and everybody was saying goofy things about transitory, because they knew that they were going to get their heads handed to them. The moments they had to start raising rates, they knew they were going to get beat up financially. They just knew it. So, all right, now from there, what else we got going on? Let's see. Trying to think what else we got going on there. And then, I guess we could take a look at Euro. Let's take a look at the Euro. Anybody want to see anything particular? You know what? We haven't looked at, we've been yakking away about all kinds of fun things today. Let's take a quick run through the whole community. Gold, silver, oil. We'll take a quick run and take a look at everything. So, and we'll leave Timothy's thing up there so you can see it. Timothy can see it. There it is. There's the 1 minute kicking with our mathematics in it. So you got here, right there. Let's go right down the line. There's the S&P 500. It closed in a daily buy. It's flirting with a weekly sell as we speak, though. Notice the fast-moving algorithm is trying to turn up, but we'll see.
We're still in the buy, so it's a neutral position, as we would say. Now, what did I just do there? Did I just move something to something that shouldn't have been? I guess it'd be down there like this. Let's grab a hold of that and move it down. Or move this up. Either way, somebody's got to go back up. There we go. That's better. So there's that. And you can see from there we go over to crude. Let's see what crude's doing. Crude is selling off a little bit in here, but we're still in the daily buy, and we're climbed into the weekly buy last Friday. So it's saying don't be too fast to liquidate your crude. Then we go over. We can take a look at the back month. Same gig, been in that daily buy from here, and we've jumped into the weekly. And the fast algo also has been telling you be long or be wrong. That's what it's been saying. And now the slow algo is joined in. From there, we slide over to silver. There's Silverado, trying to sell off a little bit from Friday's move. You can see it's in a daily buy for 4 days. And the weekly, even with the fast-moving algorithm, is still saying, not yet. We are not there now. Unfortunately for all the gold traders, it is what it is. And then the daily on gold is doing the same thing, keeping you safe from being short, because we've been in the short since up in here. And you can see it's been rolling down, and now we're getting the fast algo is busting through the zero line as we speak. Let's see, let's put it up right there. It's right there. It's just on the edge right there. Algo is 120 now. You see the last one on plot 20, on plot 6 at the very bottom of the box, 117, 113. Let's see what the next tick is going to be. It was 122 when we put it up there. 110, 117. So they're doing a little just digesting. 113, 117, back and forth. Watch them trade. See them trade. There she trades. So 110 again. Let's run over to platinum. Let's see what platinum is doing. There's platinum. Platinum is, oh, look at that. We're getting the fast-moving algorithm moving through the zero line. You see the green or the slow algorithm on the weekly basis is trying to get through the lower nonlinear manifold. That's cool. That's a very good thing. It's joining in with its daily buy signal from right there. Not bad. So we're seeing if platinum gets going, then the gold will get going. That's usually the way it plays itself out. All right. So then from there we drift over to, where do we drift over to? Let's take a look at the 30-year bond, which is very fascinating. The back months are lifting. Where is it at? Right there we go. So there's a 30-year bond. We've been in a daily buy for 2 days. The algorithm on the weekly is still dragging its feet, but at least it's moving up after being in this long sell-off. Sell-off there. What did it do? Went into the buy there. What? Let's steal one of these. Just put it there. Went into the buy. Went into the sell here. I think it did the same thing right there. Let's put a buy in there instead. I stole that one. So it jumped into the buy for a day or two for that pop. Oh, not that color. Right there. So you can see there, it jumped into the buy, and it was in a buy. It was in the weekly buy. And then the 30-year popped, gave that big high the next day after our signal. And then the day after that, it went into the sell, and it's been shalom. It's heading south. It's out of here. And then you can see basically it's trying to turn. Now, the reason I'm showing that is, check this out. The 5-year bond, the note, the treasury note is right there. The June contract. Oh, what are we getting? We're getting some action in there today now. This morning when I sent out the charts, it didn't do that. They're starting to buy it. And the weekly's still down, but that's it. It's joining in. It didn't join in on Friday. Remember, look at that. Let's widen this out for you. It missed it by the hair of its chinny chin. See, it was minus right there. We may have to check that, but it was minus. Where was it at? It's not minus. Now they're showing it as a plus. We'll have to go. I'll go to the exchange and double check the data, and we'll see what's going on there. Make sure, because that means that we might have missed that. Let me just look at that on the other machine. Let me go to the exchange, because I didn't see that earlier this morning. So we sent out the 5-year looking a little bit laggard. All right, where are you? Right there. And there. And what does the exchange show it for Friday? Let's see if the math is all the prices are correct. Not there. Are we there yet? Not there. Come on. There we go. So the 5-year is, yeah, it's you know what? It may. Oh, I see. This is wrong. So Thursday is wrong. Thursday is wrong. Thursday is wrong. We'll have to clean that up. But Friday is okay. So we'll have to clean that up and see what's going on. Let me just see if I can do it right in front of us. Reload it. Maybe that'll straighten it out. No, that didn't do it. Oh, wait a second. Okay. Let's see what that does. And now let's do a reload. Nah, it didn't do it. I'll have to clean it up myself. All right, anyhow, that's what's going on in the neighborhood around here. We're seeing, we're seeing the action in the metals. We're seeing it in the oils. Everybody's kind of drifting around on a Monday. But fascinating is that the dollar is being sold down, which is insinuating, and you can see the 30-year roaring up, which means interest rates are dropping. And now the 5-year started perking its head up. This morning, the 5-year didn't look that way. Matter of fact, let me show you what we sent out. Just a generality. Where is it at? Right there. So this is a Fed week. And our overlords are going to tell us about what they're going to do with interest rates. Where is it at? Right there. There we go. This is what we sent out this morning. And you can see it was just perking a little bit. See, that's Thursday right there. So you see this right here? See how when let's do this. Let's move this over. Or let's do this. Go like, see, how can we do this? We can go like, let's just move this down like that. And then we go like that. And I'll move this up. You'll see the difference. Like that. And then I go to there. And you can see, let's see if we bring this down a little bit. You'll see the difference on the chart. So this has to be fixed. This is accurate down at the bottom, and that is not. See the difference between this one right here and this one right there? That's the same day. So and this is live right now. So it's taking data from the wrong place. And then, see, that's half the challenge, as we was talking about, the data and the links and all that other rubbish. You got to chase after it, especially on the commodity side and not the currency side. The currencies are perfect. They work fine. The stocks work fine. The equities work fine. It's that the Commodities Futures Trading Commission is owned by the exchanges, so they do what they want to do. And that's what they like to do, is hide. You ever hear Robin talk about how unique they are? When I went to Chicago, everybody said to me, well, Murr, you're going to the snake pit now. So I said, that's all right. I'm not afraid of anything. All right. So I guess we're out of here, traders. This is Doc from North America. We will catch you tomorrow, same time, same channel. So, happy trails to you until we meet again, which will be Tuesday. Happy trails to you, to all our trading friends. Later, traders. Cha-cha. Matho, you've been quiet.